Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Good morning, everybody. Good morning.
Morning.
We got the four amigos here.
Yeah.
Four amigos. How's everybody doing today?
Happy Friday.
Yeah.
I'm gonna tell you a three
Doing
amigos
great.
joke. A three amigos joke that might get us censored. This might be the episode that pushes us over the edge. But I've been using this joke to anybody I can find anytime a plane goes by. So Martin Short, he's sitting there. Dan, have you seen Three Amigos?
I think so. I don't remember a lot about it, but it was funny.
Yeah. He goes, there's a plane flying by. Then Martin Short goes, oh, there's a Mel plane. And he's like, Steve Martin's like, how do you know that's a Mel plane? He's like, well, look, it's little balls.
Oh boy.
That's my joke. Anyway.
Oh boy.
So
oh boy.
On that note, listen, we're coming in hot.
Wow.
We're coming in hot.
We're coming in.
Happy Friday.
Have I
Happy
been,
Friday.
is
Troy's
it
been
Paul?
drinking already.
Hey,
Is that a top? Top dad.
that's a top. I got my
Yeah.
top dad mud.
That is neat.
The joke was appropriate to the mug.
Is that from Gatlinburg? Did you get
This was this was a Father's Day gift given to me by a church at some point in history.
Oh, nice.
So I was thankful for it. The
Yeah.
church had Father's Day gifts,
Yeah.
and I got one that was a coach, something about number one coach, and then another fella who is a coach. We made a trade off. So
You made a trade-off.
anyway, hey, listen. Terrible news for the economy. The jobs are slowing, but great news.
Let's
for the
check on
market.
futures markets in turmoil, Troy.
Yeah.
Matt, economy in turmoil, markets up. Because why? Why? Because the market loves the idea of free interest rates, low interest rates.
Got to get that
Sure
free money.
Got to get
Get the
that free
drip.
money. Yeah.
Like
Sure
a
does.
degenerate gambler. Yep.
I mean, Dan, guys, what have you seen in the market this week? If you had to paint a narrative, if you had to narrativize the market, what's going on in the market right now?
I mean,
Market go up.
kind of quiet other than, it's like a tale of two tapes kind of. It's like when you put the wouldn't you say when you put the actual trades on, right? Can you guys hear me?
Yeah, we can hear you.
Okay.
Yeah.
Wishing the camera. But Tuesday was kind of the lows for the week, and then we've rallied. But if you put something on like Wednesday, wouldn't you agree? There wasn't much of a move. I mean, it was kind of, and what did we see, Troy, in the last week? We saw VIX temporarily hit 19. Or how high did it get, Troy? 19 or
1920, something like that.
19.
Yeah.
And now we're back to it. Looks like we're going to probably be under 15 at the opening. So it's just like nothing matters, right? So
Right. Yeah, that was Tuesday. It was 19 point. The high was 19.4 on Tuesday.
right.
It's like when your girlfriend breaks up with you. You're like, nothing matters. Like, you all right? Yeah. Nothing matters.
It's
Nothing
like
matters.
what Rusty was saying before the show. The market should be coming down, but it just, what do we, nothing matters anymore. Nothing.
Talk about day drinking. Rusty came in hot this morning.
Listen, I'm just saying this. I'm just saying this.
Drinking.
I want someone to convince me that the market, at least since 2008, which is when I started tracking it, because I was a young man at the time, younger man anyway, and everything blew up. And you're like, wow, that was weird. And then you start to pay more attention to economic news, and then you start to just see, like, is any of this real? And so this is the challenge I have. Is the market anything but one big degenerate speculative bet? Like, I want someone to convince me that there are any fundamentals left in the market at large. You know, that's all. There was a guy that I used to fintech Twitter was always a dangerous thing to follow, but he used to say no one's trading fundamentals. We're all just trading sine waves, right? We're all just trading chart trends, which aren't based on fundamentals. They're just chart trends. They're the lines on charts, you know, sine waves on charts.
Well, there's a whole segment of the market devoted to this called value investing, and nobody likes to talk about it. I do it. I have a chunk of my port in value investing.
You've got plastics. You've got oil. You got commodities, Matt.
If you want to get a community, I got that. And for years, the whole discussion is, why is my company trading at why is this company that I'm invested in trading at less than book value? Why is this company that kicks off a 6% dividend and has a 2 PDE not going up? So there's plenty of companies out there that are like that. Well, there's thousands, but
paying real dividends, making real, having real products.
They're not. I mean, there's a whole, and even in the big companies, I mean, the Dividend Aristocrats ETF has been known for decades, which is, but that's all boring. That doesn't make CNBC headlines.
Right.
This is where we've tried to
Nobody
balance
likes
the two things.
that.
We've tried to balance the two things of Option Omega. Cutting edge technology run like a sawmill from 1955.
That's right. Bespoke.
Those are the things that we do.
Yes.
That's what we do. And so, listen, I mean, the market just continues to go higher.
All-time highs this morning.
All-time highs incoming. My queues that aren't open at all says they're down thousands of dollars. Just another Friday morning in a brokerage, looking at a brokerage.
VIX
Are you saying there's a brokerage that doesn't have accurate pre-market and post-market extended hour trading numbers, Troy? Is that what you're saying? How could this be?
And, well, Matt,
these are huge companies.
James has a question for you. Matt, what tickers do you recommend financially speaking?
It's another show and another Discord, brother.
Matt doesn't recommend anything because he's not an RA.
I have no recommendation. Here's what I recommend. The Drink of Kings right here.
Hey, no. You got to stop that.
Looking for endorsement. I'm about to mute Rusty. Man. Hang on. Anybody from Coke, reach out. That's what we recommend. Thank you.
Now, Matt, would you say your philosophy in value investing?
Not as a ticker, as a drink.
Yeah. Matt, would you say you're more like a Warren Buffett type thinking, or that value?
No, I buy listen, nobody wants to hear this.
Everybody wants to hear this.
Everyone listen. Everyone, people demand it. Matt, we want to hear it.
I'll give you one if you want to do some research.
Okay.
This actually, I'm going to tie this all together about the tickers that Matt trades that don't have anything to do with Option Omega that I never talk about. A couple months ago, I talked about Platinum on the show.
Yeah.
And what Platinum has done. And now I'm going to have to open TradingView and pull up the chart. Let's check on Platinum, the PGMs. Okay. Platinum right now is at 1395. Okay. I think when I talked about it, it was below 1,000 maybe. And somebody can go back and find the show if they really want to. But let's see, last year, at the end of the year, Platinum was at below 1,000, and it's at 1,400 now. And so, why does this matter to anything that we're talking about? Why are we talking about Platinum on the OO show?
Yeah, why are
we?
Let's take a step back and look at the global economy. What happened in April with bonds, Troy? What happened with Liberation Day? What happened with bonds?
Well, bonds went up. No, actually, bonds went down. Actually, inverse. Bonds went down because the rate went up.
Okay. So if you want to follow along, open your TradingView and pull out a Platinum chart. I'm doing this real time. When was Liberation Day?
That was April 2nd. April 2nd.
Okay. The big days are like April 8th, April 9th. Platinum was at 895. What is platinum at now? 1392. Okay.
That's like a 4,000
This is a
turn.
this is a B tier metal. It's not supposed to move like that. So why are we talking about this on the show? What does this have to do with anything? Actually, it's a lot to do with it. If you look at another ticker that's more well known, gold. Does anybody know what's happened in gold this year? Gold's at Troy. You did some gold, right? What did you do with gold?
Lost money, but gold went. Gold went. Yeah, gold went up, and then stopped going up the minute I wanted it to go up. That's
at an all-time high
works,
now.
Right?
Good timing.
Good
job.
Yeah.
So here's the deal. This is how it all connects. This idea that if you look at a chart of platinum, look at the daily chart, like Liberation Day that week, that turmoil was literally the bottom of the chart. I think that the macro picture that I talked about that day was that in this world, what is happening with the US debt and what is happening with countries that have bought our bonds, that have bought our debt for years? Are people growing more confident in US paper?
No.
Would you say country? Right. And so where does gold come in? What is happening to gold? Well, China, I mean, this is not like me talking. You can just Google this. Look at a gold chart. China has been buying gold for a really long, like at a really high level. Why am I talking about gold when we were talking about platinum? Because traditionally, platinum is an industrial metal that has been pretty correlated to the price of gold. And there was a huge divergence between platinum and gold. Hence, getting long platinum when it was below 900, like 4 months ago, where it's now at 1400. I'm not saying it was an obvious play. It wasn't. It was painful for years for all the platinum people who for years were like, there's a supply deficit. If there's a run on gold, platinum's going to go nuts. Well, it's kind of finally happened. So how do you monetize that? Well, it's not hard to find out what tickers benefit from platinum. There you go. But that's how a platinum, totally uncorrelated, actually kind of has a lot to do with what's going on in the macroeconomics, because people are fleeing. There's demand. I'm not saying people are fleeing. There's demand for gold because of a changing stance on US bonds. And because of the rarity in gold, an asset that traditionally has done well when gold does well, platinum has finally caught a bid. That's it.
Boom.
Listen,
Very good.
Like, yeah.
I was off the cuff, so I hope
very good.
I think what you just did is gave us the pilot for the Matt Simon Gold Hour.
I like it.
YouTube.
Listen, I'm not
a new YouTube video
where Matt just shows
this
up
is just
with
my
a gold
point
grill
to connect
and gold necklaces.
Gold chain.
Just
Mr.
pumping
T
gold
gold
on.
Interestingly,
palladium canes.
There are companies out there that mine gold and platinum and palladium. It's not that hard to find. There is an internet. It's not that hard to find. So my point is simply this, that I agree with what Rusty said about, a lot of the market. It's like some of these companies you're trading off the idea of one possible future. It's like there's
literally
Doctor Strange. There's 14 million. Yeah,
speculation, Matt.
So there's 14 million outcomes, and in one of them, company X goes to the market cap that it's at. But people don't want to miss out because of FOMO, because of greed, and so these companies get bid up.
Was it Thanos? What was the blood company? Elizabeth Holmes.
Theranos.
Oh, Theranos.
Thanos.
The blood company with her.
Theranos. That's not bad.
I like that better.
Yeah, Thanos. I mean, people invest a lot of money in an idea. And listen, real quick, one more dumb thing before backtesting. I've said before that if I would love a cigar sponsorship. If any cigar companies, want to reach out to me. Matt sounds like he wants a Diet Coke sponsorship.
Coke.
I want to go ahead and get you guys on record. Dan, Rusty.
Yeah.
what sponsorship, if we could get anything in the world to sponsor us?
Go for it, Dan.
Boy. Maybe Portillo's.
There you
Love
go.
that.
I knew you were going to say that. I'm so excited.
Portillo's.
Kawhi Leonard type deal where you get coupons all the time.
What
Yeah,
would I
Kawhi
like?
Leonard and Portillo's. Yeah.
There you go. I think I've been looking into the old way to make ice cream with a hand-turned bucket. Turns out the Amish are like the only people that make that. So shout out to Immergood, the Amish company that makes. I would do an Immergood ice cream bucket sponsorship. That'd be pretty cool.
If you're listening,
Non-cigar.
Amish, if you're listening, Amish business owners,
If you're listening at a YouTube live, yeah.
shout out Amish. I love the Amish. All right, so speaking of the Amish, that's a bad transition.
Long Amish. That's the position.
We've been talking about the McRib this week, and we looked at a McRib that we had been trading, or not trading. We had looked at it, I think, in March, and it had kind of dropped off in March the minute we kind of had started looking at it, and so this week we've been improving upon it. And Mr. T came out this. Shout out Rob. You guys need a sponsor, all right? Just like AA provides you a sponsor. That's nice. I like that.
I like that. It's a good one.
Well said. I mean, Troy's open this morning.
Yeah.
I think it's apropos.
Yeah. So we've been looking at McRib this morning at the 11th hour. Mr. T in the Discord. He had dropped one before, but like the kids say, he dropped another one. And the one that we're going to look at this morning is called the McRib Deluxe. And this is good. We've already had a fun conversation this morning off the air about this trade. This trade elicited a lot of primal emotions. And
Tribal emotions. I like that.
I'm excited about it. So, Matt, what do we got here? What is this test? There's a lot going on.
I explain them all the time.
Dan did it the other day. This is good. I love it.
Well, this is an inverse condor, a reverse iron condor, a Rick. So it's long the 45s, long a 45 delta put, long a 45 delta call, and it has some leg groups. You're entering it as one, and it has more room to run on the puts. And I think the idea behind this is that when markets drop, sometimes they drop. And so if that happens, there's a little more room. It is divided into leg groups, as I mentioned. So they actually both have exits, which you don't often see, but is totally practical. And it has a little bit of fitting on it every day but Monday. A VIX move down overnight, a VIX move down intraday, and min RSI. So a couple reasons to not trade it. That being said, it's got almost 500 occurrences since dailies.
So at first, there's a couple things going on with this trade. At first glance, I understand why it wins more from the change in structure. He switched the put 80 points down. So it's a broken wing inverse butterfly, right?
Yeah. I mean, would you call it an inverse butterfly at 45 delta?
Well, I would call the McRib a long, basically a synthetic, not even fly. I mean,
a puberty fly.
50 points away at 11:30 on a 0-day expiration, I would say is probably like a poor man's long.
I think McRib is a better way to say this.
Yeah. But,
McRib extra pickles.
But I was homeschooled, so it is what it is. But you're getting those points down. You get more points down on the put. Now, why is that? Well, because a put can absolutely tank, right? I mean, it can keep going on if you catch one. And so
the market can melt down more than it melts up.
Yeah, and that's right. And I'm gonna run this real quick. I'm gonna rerun this while we're talking about it, just at one contract, just to show you some stuff.
Troy, why would you run something at one contract?
I'm glad you asked. Well, clarity, because you look at those big old numbers, P&L, and you think, well, I won't actually lose 60,000. It's like, well, okay, well, if you're not going to actually lose 60,000 or make 100,000, what would you actually make closer to your account size? So it's a way to look at it. But so let's just look at Friday. Okay, Friday, August 22nd. That was week before last, I think. You put this on at 9:40 in the morning. Okay. And the way he has this is you're going to exit, you're going to get out at different times. So you're separating them out. So the put in this instance, we open at 63.99. Okay. Well, the price moves up. And so you take off the put side of that, right? When on the price move up, and you let the call run. Well, the call continued to run in this case, and you got out at 24.42, right? I'm going to catch one on the put side. Here's the put side. Okay. Exact opposite. 3 days before that, Tuesday. You put this on at 10:03. You take the call side gets taken off because the price moved down. So we're moving down. So you take the call side off that's losing. Now I want you to look at this. I mean, you basically are getting out for nothing. Like you're taking the full loser, right? On that.
Realistically, there may not even been a bid at that point.
Right. So, but you're letting your winner run. So in this case, you are letting the winner run right there. This is actually an interesting one because Thursday, July 31st, same thing. Price is moving down, so you're taking the call away. You're losing 90% already by the time you do that, right?
Yeah.
Almost an hour and 10 minutes later, you've lost 90%. But you are letting your winner run, and because you have that 80-point spread, if we go down 55, I mean over 55 points, you're going to get paid for that, and that's how that works.
Do you think it'd be better without the? I'm just wondering. I think we were talking about this a little earlier. Are you getting much for the short put? Would you be better off just being long the put? I mean, when you're talking 80 wide on a 0 day, that short put can't be worth much, right? I would think. Would you be better off without the short put? Just be long the put. I don't know. I mean, the net seems, especially in a low vol environment, 80 points away cannot be on a
Trying
0.
to find.
I mean, 80 cents on August 8th. It was 25 cents on the 19th. It does depend on the 70 cents on the 6th.
Yeah, it depends on the time. A lot of times, like it depends on the time of the day. Like if you
true, good point.
If the market has opened, because let's see here. Yeah, I mean, it really is just going to depend on the vol environment because you're going to get you're going to get a little bit of it. You're capping a little bit, but I mean, just for the sake of the argument, actually, it would change too much of the test. No, I think we could pull it off. So let me do that. Let me do that.
I wonder if it will really matter because it is so wide.
I've always been surprised on this that it does matter, but it does in the data, and so I've always been interested in this. Now, Rusty, we'll look at Rusty. Rusty saw something that I thought was interesting before the show that we'll talk about after this runs, but he has some filters on here that increase the occurrences. It actually, at first glance, makes it less sensitive. And that's where our primal emotions started coming out because we started having discussions about what sensitivity means. And I was like, you're sensitive. And he was like, no, you're sensitive. I'm like, what does that even mean? I don't even know. It got weird.
Troy made fun of me. It was awkward.
Well, it is what it is. Do better. So this drops it down to 4, right?
Yeah. What does it do? The capture rate and the win rate as well when we're capping it at 1.
35 and 20s. Yeah, it looks pretty good.
Oh, you took the call side off too.
Yeah.
Sure. Okay.
So it's just strangling it.
Just strangle it. So, I will say this. I mean, I see a test like that and I'm like, okay, well, that makes it better. I still, personally speaking, with the long stuff, I do kind of like, if you're going to do shorts, you really do want to get premium for them. You don't want to be buying a 5-cent short, on those things. So,
and I think it depends on your portfolio, right? If I was primarily a premium seller, having this on and riding them to expiration when a trending market. So let's say you keep getting blown out of stops that you're tranching through all day. If this thing ends up and you 10x or whatever, because you see that in the log in some places, when Troy was running it without the shorts on, could possibly mitigate a lot of your losses in a day if that's your primary mode of trading. And so you think to yourself, not just in isolation, but how can I throw this sucker in a portfolio, which we have the tool for that, and see if it helps the overall portfolio. I would venture to guess it would probably be best without any shorts on, if that were what you were doing all day.
Yeah. As a hedge, it works really well.
Exactly. Yeah, as a hedge. Yeah, for a black swan potentially. I mean, if you bought this early in the day and then you had a crazy thing, well, it's going to help a little bit,
That's a super interesting point I don't hear discussed much, is because there's I mean, 0 DT spread selling is probably the most common thing in our community and in a lot of sophisticated retail options trading, 0-day SPX. And I don't hear those guys often talk about having something like this on as a this is a very positive expectancy trade. And if they also have positive expectancy spread selling, it would seem like those would be peanut butter and jelly.
A good mirror.
I think people really struggle with the idea of fading themselves. There's a mental. I've heard Steve from Navigation talk about this before, because people really have, you have a condor, and the condor is on at 2 p.m. right? You put the condor on at 2 p.m. But then you have an end of day straddle that you like. Well, you in its very nature are like, one of these is going to lose, right? One of these is going to lose. And so people really don't like losing. And it goes back to the thing we talk about all the time. You really have to be okay losing. You have to be okay saying each trade has its own validity. So I'm going to trade that. And be like, well, you go against yourself all the time. Yes, I do. Yeah. Yes, I do. I mean, and it's not just fading yourself. I mean, even putting 2 trades on after one is lost. Like, I had a Rick on day before yesterday, Wednesday, and it lost a couple $100. And I let it play out. And yesterday, I look in the automation, and I'll be darned if that Rick didn't go back on again. And there's a little part of me, it's like, son of a gun. Like, even though the metrics hit, like, why would I not trade that? There was the psychological part of me seeing it, be like, well, I just lost on that trade yesterday. So you just have to kind of get used to the idea of, like, you're going to lose all the time. That's
where I like the data better, because I see this all the time. We had this discussion some people put on, they had lost on long Vega because the vols were going down. And so they said, nah, I'm going to back off. And I said, VIX is 14.2 right now at the time. I said, is this the time to throw in the towel at 14.2? But that's in their mind psychologically. They're like, well, I just lost. So now VIX is going to 12 and then 8 and then 6 and then 4. It's just like this unreasonable insanity takes place. And that's why it's like, you just go with the day, put one back on. And I think that's psychologically very difficult for people to do. That's why the automation is better, I think, with a lot of these trades, because it'll do the right thing. Whereas if you leave it to emotions, you're going to not do long Vega at 14 volatility or to do something like that, that's a really bad thing to not a bad, it's just against the odds.
Yeah.
It's not the time I would abandon ship.
Yeah. You've got to increase your pain threshold in a way.
Yes.
Right.
Yeah.
Get used to, it's just like Troy and I back in the day used to deadlift. And the guy who was training us, shout out Brian Chia, would talk to us about like your body has to get used to the stress of picking hundreds of pounds off the floor, right? And your mind has to get. It's the same with this. Like you have to like get better. Don't get on the Discord and whine. Even like stop posting things like, "Oh, my trades are bad." Well, you're taking ownership of them, and then you're saying they're bad. No, they just lost money today.
Yeah.
Just say the trades. Don't even own them. Don't even say mine. Just the trades were not profitable. Just keep with the facts. Eliminate the emotion. Increase your pain threshold. Stop reinforcing like crying emojis and hugging emojis and all that. Like, stop it. Stop it. Just.
And is the size too much? I mean, if someone is doing that, are they new and trading bigger than they should be trading? Because if you're newer and you're trading at a small enough size,
Yeah,
you should be trading a small enough size that you can let these things go, right?
That's
And that's
right.
usually what I find a lot of the time. Size is the culprit. They're trading too big, too quick, and then they'll blame because they really were trying to shift the responsibility. I'll trade bigger size, but now it's the back testing. You want instead of taking ownership of that, what you're saying. And I find that a lot because it's good to blame a tool. A tool can't fight back, right? Right? Blame the tool.
I'm so sick of everybody doing this stuff. I go to Rusty, he's like, you're too big. I go to the doctor, they're like, hey, you're getting too big. Like these guys with their
I never said that.
Getting too big. Cracks me up. Yeah. So anyway, each trade has the ability to be oversized. That's the benefit.
That's
of these
right.
things, is each trade, whether you're condo, and we talked about this a little bit yesterday. Like selling premium can trick you because it's smaller wins, but you win more often, and so it's that much quicker that you think that you should up your size, and you'll fall for the thing of saying like, I've got 8 winners in a row, it's time to up my size.
That's right.
Well, now you're just setting up for like a big loser.
A big loser.
And whereas the long premium stuff, the sizing is kind of in the beginning. It's like, well, you could lose all of it. So whatever you put on, you kind of know at the beginning what it is, and you feel it more often. And that's why I think it's so psychologically hard to do some of these long trades, because you're like, the size is just a lot larger that you're losing.
That's right.
But the winners it's the inverse, where the winners are a lot larger, So anyway.
Do you want me to still rant about what I didn't like?
Oh, yeah, please. Sorry. Yeah. Rant.
Bring it back up. Bring it back up. So because I'm a curmudgeon, Troy showed this off this morning and I immediately got grumpy. And here's why. So I looked at this and I thought, okay, VIX overnight move, any sort of VIX overnight move down, that looks fine. 0.01, it's not, overfit at all. 45 deltas, nice round numbers there. 40 and 80, one's double the other. Like everything's, doesn't look microfit. It's an idea, right? We're going to give the Troy said, to put more room to run than the call and things like that. Couple things I don't like. The main thing, even RSI min 40, like that's a nice smooth level to say. Below that, you're in turbulent waters and you're paying way too much for this thing, right? It's going to be really expensive when the market's really choppy and VIX is high. So I get all that. Here's what I don't like. VIX moved down of 0.04%. I believe the previous backtest you guys had was 1%. Okay. So in one first thinking, you're like, okay, this is great. You're looking for less of a VIX move, so you'll have more trades now. But here's my question to you. Why 0.4%? Is there some mathematical beauty to 0.4% of a VIX move, which is tiny, right? That's a tiny move in the VIX. That's like 0.12 on, it's something crazy. And so the question I have, how does someone arrive at that number? My guess is this. They took 0.1, the 1% as a starting number, and you keep messing around with the backtest till you get a really high MAR. But the question I have for you, does that have any bearing on future returns? Or this is an open question for everybody. Like, are you going to size up or trade this more confidently because a 0.4 is better than a 1% on the VIX move, which is going to equate to a couple fractions of a point of VIX in a given day? What's most likely that happened is that you eliminated a couple trades, right? That were bad, some bad losers by accident, or you got a couple big winners that you didn't get the other way, or because it's a floating entry, you happen to get in front of the trade right before it ramped, right? Whereas like 0.5%, like I would have gone with 0.5%. Like looking at this, if you want more trades, go with 0.5 or 0.25% or any move at all, right? You could do 0.01 points, but not 0.4. And Troy tested this. I think we said do 0.3 and 0.5, and it was demonstrably worse, right? And so the question would be, well, does that mean 0.4% is magical? I would say no. I would not have high confidence that using a 0.4% is somehow going to have future returns better than 0.5 or 0.3. I feel like that's just randomness. And to quote one of the best books on this, Nassim Taleb, you're getting fooled by randomness. You really are. So at the end of the day, I would say when backtesting, just use round numbers and as few filters as possible. That's all I'm saying. That's all I'm saying. Any thoughts on that, guys?
Rusty's that coach that just comes in and says, what can we do to improve? Well, you suck at football and you got to get better. You guys suck. You got to get better.
Well, but don't you? I think what Rusty said. Think about the numbers. Like Rusty just said. Okay, does 0.5 or 0.3 in terms of what effect that has on VIX, right? That's nothing, right? Why? And so if it does, and somebody just looking at the numbers could say, well, it did something. All right. Well, wait. Maybe for past, like Rusty said, yeah. But for future, no way. Can you logically say that, that little difference in VIX, what freakishly happened in the past is going to happen in the future? So I think through it, because if you're just going by the numbers, you could say it works, right? But
that's right.
Bringing in the reality of the option world, what does that mean in VIX? Yeah, I mean, it's it's going to cause a little heartache possibly in the future. Is that randomness that happened, is what happened in the past. Are you really banking on, that happening again in the future? Probably a better way to skin the cat.
Yeah. And what you'll end up doing is this, right? To piggyback on what Dan just says, what you'll end up doing is permanently chasing the back test.
That's right.
Right, with your own portfolio. So you're going to be constantly being like, oh man, this test stinks now. And then you're going to be doing a new back test, and then you'll start trading that until it loses. Instead of coming up with a robust test because the goal would be this, you don't touch your stuff very often, right? If you're changing all of your trades every month, you're going to never realize the profits that you're looking for. You're always going to be chasing a bunch of microfit bull crap. So try to come up with something that you would have confidence in saying, I have a good idea of why this will continue to work into the future, right? Which requires you to learn options and to learn a little bit about the market, and then you really should touch your existing stuff rarely, right? Like you got a 7-year back test that's done great. Well, if it starts to fall off a cliff and it clearly something has shifted, then maybe you downsize it or something, right? But don't add 50,000 filters until it fixes it, and then it's going to suck again in 3 months. That's kind of the point.
That was good.
Matt, do you have any thoughts about that?
I can't interrupt or improve on that gloriness. That was I just made up a new word, gloriness.
Gloriness, yeah, I've never heard that one.
It was great. I mean, listen, we're not a nanny tool. So we have stuff in the tool and we have an overwhelming amount of content. in a community to try to help people understand how to use it so they can apply it in their own situation. But I mean, there's a lot of people, shout out Mark Anderson's talked about this. Shout out Steve at Navigation. A lot of people have talked about this and that this is an extremely powerful tool. And just with backtesting in general, Taleb actually talks about this in his book, Fooled by Randomness. He talks a lot about, there's a section on backtesting, not options backtesting, just backtesting in general. And he makes it's only a couple pages. You should check it. If you're watching this show, you should check it out from the library if you don't have it, and read the couple pages on backtesting, because that's basically one of the main points he makes is like, he thinks I won't spoil it, just read it. But yeah, don't overfit your backtests. And in this case, a way that you can tell that was overfitted is if you test 0.3 and 0.5. And if there's a pretty substantial difference both ways, which I think there is on this one, then you will have probably a higher confidence backtest picking a different number than something that seems to be a little tweaked in.
Well, listen, on that note, you guys got some work ahead of you this weekend.
Economy in turmoil. Markets love it.
Yeah.
Love it. So, well, listen, Dan, glad you're back this week.
Glad
and
to be back,
back in Knoxville, and we'll go from there. One day we're going to do a live show with all four of us in the same room. Don't know how
that'd be fun.
That would be.
That'd be fun.
Hey, Troy, can you try to get Talib on the show one day, or he'd be good?
He's on the list after Trump and J-Pow, isn't he? He's number 3.
It's Kawhi,
Trump,
Bomber. Yeah. Obviously
Yep.
LeBron, but anyway. All right. Well, listen, you guys have a great